All right, let's get a couple of stocks and a reader on those, a bit of a deep dive. It's from, and we'll get that from Jason McIntosh from Motion Trader. Jason, welcome. Good to talk to you again.
Yeah, Andrew, thanks for having me on. Good to be back.
All right, let's just take a look at the broader market at the moment, because our theme at the moment is we're just about to enter reporting season, and that picture is really complicated at the moment, given what's going on with COVID and the lockdown in Sydney. What eye are you going to have on that, on the guidance? Because it may not be forthcoming from some companies because of that uncertainty.
Look, I think it's generally quite an uncertain market. The trend in the market and the trend in the price action, the All Ordinaries, it's definitely up. The market broke higher from a one and a half month consolidation last week. That's all good, but when you look at the US market, it's really all being driven by a few of the mega cap stocks. And that worries me, the lack of breadth in the market, that we're really seeing the market move higher, but a lot of the stocks aren't participating. So that's always a concern coming into reporting, seasonally weaker part of the year. So trends up, you got to expect that trend to continue, but be aware that underneath the hood, things aren't always, things don't look particularly strong in some areas.
All right, let's get stock specific then, and take a look at a couple that you've been looking at. Atomos is the first one. This content creator, of course, a technology company. In fact, its shares have been on a tear. Well, it certainly was in the past month or so. Why are you liking this at the moment?
Yeah, really interesting company. It came up in my momentum scans a few weeks ago. And that's what I'm using to find these ideas. I use momentum. So momentum doesn't guarantee you're going to get a superstar stock, but all superstar stocks have momentum. So it can help put you in the path of the right companies. So with Atomos, they've got a market cap of about $260 million. They're not in the All Ordinary, so I guess that probably takes it off the radar for a lot of people. It's one of those stocks which is going to be just naturally harder to find. But it's interesting. They're, as you say, it's an emerging technology company. And what they do, they produce monitor recorders that attach to a user's camera. And what happens from there is they can use that monitor to quickly create high quality content at a low cost, an affordable price. And that content's then often used on social media, YouTube, can be used for TV and even cinema. So it's really producing that cinema quality content and output for the everyday user. And a key driver for the company has been this technology which has been developed by Apple. It's called ProRes RAW. And what that does, it compresses large files into a smaller, easy to use format, but it maintains the quality. And this is and Atomos is the only company which has been licensed to natively record using the technology. And so the growth of the company is coming through most of the main camera makers are now embracing this ProRes RAW. And as more do so, it increases the demand for Atomos's monitors. So look, really interesting growth area there. And they're also getting got an eye on the video gaming and video conferencing markets. So they all require video technology. And what COVID has done, COVID has actually been a bit of an opportunity for the company, because we had video conferencing was already on the rise. But COVID's really brought that forward, the company says, by maybe 3 to 5 years. So it's an area where there could be significant growth, and coupled with what they're doing with the ProRes RAW and the video monitors, look, it's a really interesting story. Management just came out with a trading update. They're saying the total sales for the current, or the year just finished, will be around $77 million. So that's up 73% on last year. It's about 6.6 million dollars ahead of where some of the analyst forecasts were. So tracking really well. And the last half was a real standout. It was up something like 275% on the previous period. So it's also the strongest half, I think, of the company's history. So they're doing some good things financially. Revenue fell during the COVID period, but look, when you step back and you look at pretty much from 2015, they were growing revenue every year. So they've got a good track record of growth and executing on their plans. Strong balance sheet, $23 million as of the end of December. They're going to release their full year results, I think, next month. So we'll get an update on where that stands then. But really, I think this company is well positioned for some good growth over the next few years. And just lastly, management also have a meaningful, quite a good stake in the company. So that's one of the things I look for in these emerging companies. You want to see management on board. You want skin in the game. Nothing says management believes in their story better than putting their own money in.
Yeah, absolutely. Putting their money where their mouth is. All right, that's Atomos. Jason, let's move to your second one there, ReadyTech. Look, I'm not overly familiar with this one, but it is a SaaS platform for payroll and human services. It did make an acquisition, back in March of Open Office. Tell us a bit more about this.
Yeah, it's look, I hadn't heard of it either. It came up in my Momentum scans. Momentum's so interesting. Momentum is a bit like Opportunity's calling card. It draws your attention to companies like ReadyTech, which you may not have heard of, and then you look behind the momentum, and often you find some really interesting stories. And this is very much a case in point. So market cap about $240 million, just outside the all ordinary. So again, for many people, it's not going to be one which is going to be naturally on the radar. It's so what they do, they provide cloud and SaaS based platforms. So SaaS is software as a service, and they specialize in payroll and human resources, and they focus across the education and employment sectors. They've got around 4,000 clients, and these range from small businesses through to large corporations. And I really like these service as a software business models, because they're typically subscription based. So you're not downloading a piece of software and that's it. It's all centrally hosted, and you're accessing the service via an app. You subscribe to it, and subscriptions lead to recurring revenues. And the company's been doing really well on that front, because something like 89% of their revenue is recurring. And then the key to that is you've got to retain your customers, and they're doing a great job at that, because they've got a 95% retention rate, which is really that's the key to having a successful subscription-based business. And revenue grew around 13% in the last half, up to close to $22 million. That's coming from new business and also cross-selling to their existing customer base. But what management's saying is that there's this real digital transformation taking place, and they're seeing their customers increasingly shifting from the old technologies over to these new cloud-based platforms. Mm-hmm. And they're also growing through acquisition. And you mentioned earlier about the Open Office acquisition. So that's a really interesting one. It's an integrated software business that services state and local government, and also the justice system. And not just in Australia, they access a global market.
Yep.
And they're saying that these entities are digitising their services at a record rate. So it's really opening up a real growth avenue for them. And what's interesting is that Technology One operate in the same space. So Technology One, ASX listed, $2.9 billion company, and Open Office have actually been winning pitches against them. So it's always a good sign when the small emerging $240 million companies outplaying the big $2.9 billion companies. So I think that suggests that there's real growth potential in both the pre-existing business and the new acquisition. And lastly, their management again has a strong shareholding in the company. They own something like $20 million. Around $20 million worth of the shares, which is around 9% of the company's capital. So, look, I think this is a company which we could hear more of over the next few years.
All right, terrific, Jason. That's two ones to look for. ReadyTech there, we've just been speaking of, and Atomos, all tech related. Jason, thanks for joining us from Motion Trader.
Andrew, it's been a pleasure. Thanks for having me on.
Cheers.